Hey, what's up, guys? Welcome to today's episode of Trading Rebellion. Thanks for joining us. I'm joined by, as everybody knows, Nick Mancini, Trade Chains Chief Community Officer, Head of Research here, who you see daily, midday Eastern Time on the Squawk Box. So, Nick, how you doing today? You feeling good?
I'm doing well. We had a pretty positive FOMC yesterday, and most things are up. So I'm very optimistic for the end of the year. How about you?
Yeah, feeling good. Starting to get vibes of the beginning of 2021 all over again. I know there's a lot of mania going around, especially with altcoins in particular. A few mega outliers there, but I always caution, as do you people, to not get too frantic and don't forget your mistakes from the last cycle, which everybody seems to do, no matter what they say. But first, folks, we'll get to let's just go to the dashboards real quick and take a look at the markets. You can see here, Monday we reported a $1.5 trillion market cap overall in crypto. It's now up to 1.63, and that's with Bitcoin price going down. So you have alts lifting that market cap up. Sentiment, a healthy 58 over 100. Like to see it a little more. And trading volume now is 83 billion. And if you listen to us back in, let's say, the summer of this year, all we did was complain every day about the trading volume, because that $83 billion figure you see now was more like 16 to 22 billion. So a big far cry from where it used to be. But as Nick mentioned, Bitcoin up 2.5%. We got some outliners like INJ. A lot of people following INJ lately. Up 20%, was up a little more earlier today. But listen, it's not going to be up only or up forever. So just pay attention to the positions you're putting on. And to let you guys know, Monday we're going to discuss the Bitcoin ETF trade going into February or January, and what we are doing to construct our positions on that trade that might help you decide what to do. Here, looking at the overall numbers, you can see a lot of green in the last hour and a lot of green in the 24-hour as well. So things are looking healthy today. As Nick had mentioned earlier, we didn't get our feathers ruffled from the FOMC meeting or the print that came out earlier in the week either. So that was a good thing. A lot of people expected calm waters coming out of that. We're going into a very interesting year where we're going to have the halving, we have the ETF news, and we have presidential elections, campaign starting. So there's a lot going on, including most likely the Fed pulling back on rates. So it's a perfect storm scenario that we're going to be tracking over the next 6 months and trying to bring you as much data on. But Nick, bring us into the markets. Let us know what's going on with the big boy trades.
Yeah, so I think probably best to start with the equities chart just to kind of get a taste for how the largest market reacted to yesterday's FOMC. So if you were watching the daily crypto update or you're in the TTC community, you would know that we were bullish. We were bullish out of the FOMC meeting, provided comments around rate cuts actually happened, and so that occurred. And pretty much, we had the actual rare explosion right at 2 o'clock that was actually followed through. Usually you see kind of massive amounts of volatility up and down between 2 and 2:30. And yesterday we got pretty much everything we wanted wrapped up in a nice little bow for us for Christmas by JPal. So this is exactly what we want to see. We obviously want to see it stay above the previous daily close for S&P 500 futures, which is 47.04. If we can stay above that heading into the end of the week, I have a feeling we'll be at 47.50 or higher by next week. So looking at the Bitcoin chart, we obviously had our Sunday dump. It's not unusual to see a bad Sunday evening into Monday morning. And I think this maybe just with some de-risking into FOMC that maybe got a little bit too extreme. So obviously we skyrocketed yesterday after FOMC, and we've kind of held today, and we had the ledger situation, which we'll get into a little bit later, obviously abated now and price action has normalized. But, looking at equities, looking at DXY, which is absolutely plummeting like a rock past the levels that we had lined out. It is now below 102.4. So the next natural level for DXY that we're looking at is 101. So if DXY continues lower, equities stay at the same level or inch higher, I do expect Bitcoin, Ethereum, and the rest of the altcoin brigade to continue moving higher into the end of the year. You have to realize FOMC was the last kind of worry event. We won't have any inflation prints until next month, after the Christmas season has ended, after the new year has come. So it does make sense that we're entering a bit of a, I don't want to call it a full Goldilocks phase, but I do think the market will be more bullish than not on the heels of FOMC talking about rate cuts, which was exactly what the market wanted to hear going into 2024. When will those rate cuts occur? How much? We don't know, but the Fed talked about 0.75% total, likely starting in mid to end of Q2. Whether or not it's more or less, the market will react when we get to the next inflation print, the next FOMC. But right now, things look pretty good, in my opinion, for the next 2 to 3, maybe 4 weeks.
All right. Now, when we talk about that type of momentum, Nick, are we talking about, listen, throw your darts at the board and let's run, whether it's equities or cryptos, as far as making gains? Because, you can almost safely say for the next 4 to 5 months as we go up, it's almost going to be a type of scenario like that. But do we still have to pay attention to fundamentals of these equities? I know there's a lot of fear in possibility of tech bringing us down going into Q1, and then of course all the hopium of crypto just shooting through the roof.
Yeah, I'm sure for crypto, you could throw a few darts. A lot of these meme coins, especially centered around kind of the dog mania, if you will. We just saw Bonk run, and every kind of hot L1, such as AVAX and Solana and even Injective and a few others, are starting to kind of pick up their little ecosystem. So, always smart to kind of have a bullseye dart bag, if you will, for those kinds of coins. But I think on the fundamentals basis, you definitely want to look for, on the equity side, they should have, good sectors, right? So maybe holiday season pickup, Target, Costco, Walmart, these assets that are going to pick up heading into the end of the year, but also, big blue chip names too, like Amazon, Apple, Tesla just had a bit of a scare, so probably not the worst buy in the world or worst long for a bet heading into the end of the year. So definitely would still rely on the fundamentals, but it wouldn't shock me if we saw most sectors higher by the end of the year. As it pertains to crypto, just recently saw a study. L1s have actually been outperforming, Bitcoin and Ethereum on average. So, we've seen ones Injective, AVAX, Solana, some of the new ones like TIA, which is Celestia, have really picked up. And I would expect winners to continue to win. We just talked about this in the TTC community. I called out several coins over the past couple of weeks that I expected to outperform. Most of them have. And that's typically because if something is leading early, it's going to lead late. If you faded Bonk, every week, you would be a pretty sore loser at this point. Same for TIA, same for Injective, same for AVAX and Sol. Now, some of them will kind of casually start to drift off after kind of reaching parabolic heights, but then you kind of pay attention to, okay, start on Monday. What was the best performer of the previous week? It'll likely be one of the top performers of the next week, and you'll notice as they kind of shift. I think AVAX kind of relaxed a lot this week compared to others. But if you go and look at the Sol chart, Sol spent a month long of consolidation before breaking out again. So always keep those on your list. But right now we're noticing L1s are the best kind of risk reward plays. But obviously, if you were buying Bonk or you were buying, I think even getting into Doge or SHIB as of recently have been performing pretty well. So always good to kind of dabble in some of those small caps that could have high returns, but with the note in your mind, hey, this could, go to zero, or this could kind of get slashed on some sort of random headline.
Yeah, definitely the volatility of the meme coins is something to take a look at. Nick mentioned a few tickers that are absolutely meaningless and brought on just by community, but that's for the degen in us, and those returns have been tremendous, but those losses can also be tremendous, and someone always has to paint the top in order for it to go down. That being
sorry to interrupt, Alex, is the Bitcoin ordinals and kind of the Bitcoin chain stuff. So we saw Ordi, which I forget exactly, maybe it's called ordinals, but the ticker is ORDI. That's been a massive outperformer. STX, which is Stacks, has been a recent outperformer. I'm actually in a Stacks trade myself right now after the recent dip today. So definitely would pay attention to the Bitcoin kind of ordinals and Bitcoin finance ecosystems. Whether or not they're actually good products is yet to be seen. But as Alex mentioned, community hype, being front and center of the conversation is certainly important for outperformance in this stage.
What's also interesting, Nick, is you go back 24 months and you would have found us sitting right here in front of everybody and talking about L2s, right? L2s, all the rage, everything going on. You bring upon, Solana and, what it's doing to solve its problems within the ecosystem. And you look at Solana in particular today, with everything that's going on, probably the busiest L1 there is out there right now. It's kind of put a shade over L2s, and we've done a flip, back. Do you see that trend continuing, or do you see L2s coming more front and center as they did in 2021?
It's tough to call at this stage. I definitely wouldn't count Solana out, but as we have noticed over previous bull cycles, it can be kind of a flavor of the week or flavor of the month type situation. So a lot of money, the typical cycle is L1 makes a lot of money, L1 meme coins or L1 hot projects make a ton of money. Those kind of reach their cap, they'll consolidate for a month, and that money will rotate to, let's say, other L1s. And then kind of restart that process, right? L1, meme coin, hot projects, rotate. So I would assume that is going to happen. And we've already seen AVAX ecosystem kind of pick up with its explosion. I've seen a lot of my friends have been sending injective ecosystem tokens and so forth, but still seeing plenty of Solana projects sprout up, whether it's NFTs, whether it's DeFi, whether it's meme coins or whatever. So I would definitely continue to focus on Solana, but also have in the back of your mind, hey, if this other L1 is mooning, if it's up 2, 3, 4x since the start of the year, and it's kind of keeping its pace with Solana or some of these other top performers, maybe it's a smart idea to at least keep an eye on that ecosystem. Now, the difficulty with that is, how do I know where to pick the right projects? How do I know I'm not going to get rugged? And that's kind of the part of the journey that'll keep people kind of on an exchange, leverage trading, or just holding spots of whatever that L1 is to kind of protect themselves. But I would not be shocked if we saw Matic and OP really start to pick up in the coming months as people say, AVAX is up 5x, maybe time to rotate to something else. The other one is Base. Now, Base doesn't have a token, but Base is Coinbase's, L2, and I would expect it to pick up on the meme pace as Coinbase becomes more talked about in the media and on Twitter. And the old adage goes, once Coinbase is top 5 on the App Store overall, that's when it's time to start taking money off the table, right? So as Coinbase starts inching towards that top 5, top 1 spot or whatever, and I think it's like maybe 200-300 right now overall, Coinbase is going to get more attention, and therefore Base will as well. So they will have their time, but it's also tough to say whether or not those projects will outperform Solana, because we are still I feel like we are still in the beginning of a longer period, provided the ETF actually gets launched and sees inflows. The inflows are going to be important for the ETF, so we'll get there when we get there. But as Alex said, probably a smart time to really start tracking those L2s and those other projects. But whether or not you really need to go all in right now is yet to be seen.
Yeah, interesting. And, one of the things that I feel has really held Base back, it launched with a lot of hype on its test launch, is the efficiency of use, right? And the same can be said about ordinals. And, I think that's why we don't see a lot of really mainstream use of it or practicing with it just yet. But those are sleepers that are hidden in the, in the bushes there that are going to come out, particularly Base. I mean, Coinbase doesn't throw money after bad ideas or bad projects, especially when it's their own, to Nick's point. And, you brought up OP, Optimism. I mean, Optimism, just shot up, when this little run started and really outperformed a lot. And we spoke about Optimism a lot at the beginning of the year as this up and comer. But it seems to really, as far as price projection is concerned, taken, it's in that front running team. So OP looking really good. Let's see what else.
Arbitrum has some of the top TVL for L2s as well, total value locked. So I didn't mention Arbitrum with OP and Matic, but I would keep that one on your list as well, because they're all kind of sister chains. And I guarantee you, if you see an OP token launch, they're going to mirror that on ARB, or they're going to figure out some way to kind of recreate that magic on these other chains as well. So I think you'll have plenty of opportunities depending on whatever L2 you pick.
Yeah, here's ARB right here. And if you go to Trade the Chain, you can see right here, TVL, $2.81 billion right down here. So it's to Nick's point, it's pretty damn amazing as far as how much they've been able to attract, and not just attract, but retain, as far as TVL is concerned. One thing I want to brush on real quickly before we go to what happened to Ledger this morning, which is just further disappointing news, is, the little flash crash we had with Bitcoin. A lot of people saying, hey, it's overbought. Volume started thinning out and all this stuff. One major contributor that I looked for when I saw that happen was, the normal, we go through this rebalancing cycle, right? Every so often, particularly with leverage in future positions. Is what happened last week anything to be concerned about moving forward into January, or was that a typical market, rebalancing of sorts, shakeout, pause going on?
And when you say last week, do you mean what happened on Sunday?
Yeah, exactly.
Yeah. So I'll pull up the chart right here, because I have the bottom is open interest. So basically how much is being gambled on. And let me see if I can move this up. So so this chart right here with the the little candles on the bottom is open interest. So we saw, and this started at 82K Bitcoin, dropped down to 75 Bitcoin, so about 7,000 Bitcoin worth was wiped from the markets. And it's funny with open interest is you can actually kind of almost chart this too. And you can draw almost supports and resistance on these charts. So it almost has just deviated the low ends that we were at back when we were ranging back in November. So, to your point, Alex, it does seem just kind of more or less like let's flush out a lot of this leverage if we really want to move higher, and we've got all of these stale longs. Then what happens if those longs close as soon as we hit 45K? Are we even going to dump further because it's going to fuel something even worse? So this is something that market makers will try and do to kind of purge the excess, get out the weak hands, and continue to move higher. So if we saw open interest just absolutely plummet, well past this white support line that I have right here, I would start to get a little worried, because that would mean that, very large players are taking money off the table, and they're likely closing longs en masse before we kind of reach that 45K, 50K target that we've all kind of been talking about. So with it sitting around the support level and kind of hovering at this level back down to that same level that we dumped at again, but we are now $3,000 higher. I think in terms of an open interest perspective, we look pretty darn good right now. And we also, with the leverage drop today was, I think 4,000 Bitcoin, maybe 5,000 Bitcoin, just from that Ledger news as well. So, and again, price is right back up to where it was pre removing $5,000 or 5,000 Bitcoins worth of open interest. So when you see big open interest drops, but price is staying strong, that is certainly a good sign. And to be honest with you, Alex, I would be shocked if we don't see another 5 to 10,000 Bitcoin added in open interest by next week. And in the best case scenario, all of that is happening as we approach 45K.
All right. So the big question, are we going to see, there's talk from a lot of internet analysts, as we like to call them, going up to around the 47, 48 mark and then pulling back. Do you think that's going to happen? Are we going to take a dip and reset before going up, or are we done for the year and looking forward to January and the ETF trade?
Now that's really tough to say, but if I pull up the chart again, and it's going to be a little messy because I got all my lines here, but I think the two things that I want to call out are RSI holding above the 53 level. So if we saw RSI drop below 53, which is basically this low from Tuesday, the 21st of November, then I would start to get worried. Because if we look at this massive RSI trend back from that dump on the 17th, right, RSI has just been drifting higher, right? We've had a couple of dips, but again, back to market structure, we're making higher lows continuously. So that means the momentum indicator is still pointing in the direction of north. We also have, not fully yet, but stock RSI is beginning to be reset on the daily perspective. So if we can survive through the weekend above, 43K, maybe 42K at the worst, then we should have a reset stock RSI. And every time that's happened, it's ended up leading to either a short-term rally or a long-term rally, right? So those are really good things in my book. And then we look at OI. OI looks, open interest looks very normal. So, in the worst case scenario, I mean, we can still drop to 39.6K and still be fine. But if we think about catalysts, why would it drop to 39.6K? The only thing that would really worry me is if equities really start to plummet from here. That would be kind of a sign of maybe someone's de-risking on a larger scale before the end of the year. But I think as long as we can get above 44.7 and confirm, meaning we close a candle above and then we close a second candle above, usually with a retest of that level, then I definitely think that, just to bring up the chart one more time for a little perspective, I definitely think that 48K and 52K can definitely be hit prior to the ETF date, which I believe is either January 10th or January 11th. And just to give you a word, where did you get those numbers from? Well, it coincides with the previous high from the 29th of March is 48K. The previous high from, it's not the December high, but it is the high from when after the December dump, is sitting at 52K. And if you kind of look at all the key numbers we've hit, we've usually bounced or tapped these key highs and lows from back in 2022. So I still think, again, above 44.7, 48K is likely. Above 48K, 52.3 is likely.
Yeah, I see the two legs down on the left of that screen you just showed, and we know exactly what happened when that occurred. So glad to leave the past in the past there. But there you go. You're very optimistic, Nick, and I like it. So, all right, let's move on to what we clickbait titled you in with, and that is what happened with Ledger this morning. Not good indeed for the company. There was a wallet drainer code added to Ledger. There was an exploit on Wallet Connect, basically causing a lot of frantic people. The one thing I can say is, thank God, not a lot was exploited. They're talking around $600,000 to $1 million, from various funds taken. But what I want to do is I want to show you how this worked and how you need to pay attention when you're doing things such as connecting your ledger to a Web3 dApp. Okay. There was a very good picture of it put out. This is how it looked when you plugged in your ledger, attempted to connect to a dApp, and then were fooled. If you notice here, you see a Wallet Connect box come up. Now, when this comes up, and let's say you're using your MetaMask, your normal thing is to go down here, hit MetaMask, and when you do that, it sends a handshake to your MetaMask, which pops up on your computer browser if you have it within Chrome, let's say on an extension, and you sign it and basically say approve, and telling it can communicate with the site. Maybe it's sushi, maybe it's 1 inch, whatever it may be. Now, what a lot of people did not see is that behind this box is another box. Well, guess what? That's the real one, folks. And what this exploit did was put this front one, which is a fake box, in front of you, trying to cover the old one, sending a signature to your MetaMask or to your Trust wallet or any other wallet you're using on the list here. And when it went to do the handshake from this box and you clicked approve, goodbye crypto. It was a malicious code that drained your wallet. But it's very sneaky. If you're doing it quickly, you may not even notice that there's 2 boxes open here, with the top one being the exploit. So pretty unbelievable stuff, the latest in what we're seeing. But it was done on Ledger, from Ledger's end, and that has been confirmed by them. It's also been confirmed that they fixed it and did patchwork. I wouldn't be so comfortable in using dApps right now as far as Wallet Connect, maybe for the next day or so. But Nick, what are your thoughts? This is like the third big incident for Ledger in the last 24 months, including an email breach, including being accused of, they say accused, but third parties have found out there's been data sharing coming from Ledger Live back into Ledger. So the trust is quickly bleeding out here.
Well, aside from it beginning with a software engineer clicking a phishing link, which I would expect if you're a software engineer, you should be probably one of the most adept humans on the planet to notice a phishing link. It was an ex-Ledger software engineer so he no longer worked for the company. So I don't know about you, Alex, but usually if the first hour after you leave a company, all of your privileges are revoked that goes back to whatever company internal system. So that was shocking in itself, which shows a lack of security on Ledger's side of things, just, barring the one engineer who got phished or whatever. But so that is worrisome, because Ledger also went through, the email leak as well. So it's going to be really tough for Ledger to come back from this, in my opinion. I will admit their crisis communications were good. They did handle things in a very quick amount of time, all things considered. And they did suggest not to use any dApps using Ledger Wallet Connect for, I believe, 24 hours as of a few hours ago. So as Alex said, probably safe to just leave it overnight, check back for some more news in the morning to make sure everything is good. But in my opinion, if you're looking for cold storage, if you're looking for any storage option, Ledger just got moved to the bottom of the list because it's been multiple times in this opinion, and we know people who have ledgers. We've had ledgers. It's been something we've talked about many times, dating back 3-4 years at this point. So unfortunately, they've shown their cards, and I would personally suggest to not use Ledger. It's tough to even suggest anything at this point because you don't know what's going to happen. But right now, Trezor seems to be the favorite option over Ledger at this stage. So it also goes back to just what Alex said. Just whenever you're doing anything with your decentralized wallets, don't click things indiscriminately. Just take that second to look a little bit extra, because it's not like you're doing a transaction with your bank where they'll refund 100, 1,000, whatever, after whatever process that is. It's just you have to double check these things, unfortunately.
Yeah, no mistaking that. There are no refunds in crypto when you make a mistake. And to Nick's point, particularly, let's say if you use MetaMask, a pop-up window opens up and tells you what you're signing, what you're giving permission for. It is imperative that you read that every single time, what the description of the permission is, before clicking accept. I do want to show this one more time. This is the fake window that popped up when attaching your Ledger wallet to a Web3 dApp online. You can see in the background the real window for Wallet Connect right here. So ingenuity went into this. Seems like it was put in by a real dumb move of clicking on a finish. I mean, listen, I got 2 ledgers right here on the desk. I've used them since 2017. It's unfortunate for that company that once was the most trusted, but you do have options. You have, I think, some of the popular ones, Arculus, Trezor, as Nick had mentioned, and things of that nature. So, unfortunate. Glad not too many people lost money on that. I do want to go real quick to Nick to a question in the comments. Nick, can you please show us viewers how you add open interest indicators on the charts? Would you mind walking us through?
Yeah, and here's the question down below for those who are watching. So it's very simple. You have to have a TradingView account for the way that I do it. So we're on TradingView right now. We're just on the Bitcoin page. So you click indicators. And it should show, my favorite indicators. Let me confirm exactly which one this is because I do get them mixed up. Let me double click that. So it's open interest auto spaceman BTC. So if you are watching the stream right now, it's on the bottom left. So I'm gonna say it again. It's open interest auto spaceman BTC V1.1. But fortunately for us, it is a little bit easier in TradingView. So you type in open interest auto, and usually it'll be the first one that pops up because there's not too many with that name. So then you would just simply click it, and it's going to add it again on my chart for those who are watching. And then I can go ahead and remove the extra one, but then you can also toggle it if you have, let's say 3 different indicators like I do. So if you want it front and center, there should be an arrow on the top right of the open interest indicator pane that says move pane up. And then you can obviously move it up and down depending on exactly where you want it. And then you can also drag the length of it up. So if you want it to be half the chart, you want it to be smaller than it is, you can do that as well. So again, open interest auto spaceman BTC, type that in the indicators button. Or type that in after clicking the indicators button, and then click it in the indicators, and it'll pop up right on your chart. And if you're in the TTC community, feel free to DM me if you have any questions or it's not showing up or there's some other issue. It is a free indicator on TradingView, so should be easy to acquire.
Absolutely. Thank you for the question, Michael. We're always here to answer. And well, that about sums it up for this Thursday. Don't forget to catch Nick tomorrow midday for the Squawk Box on the market. I hope everybody is winning right now because it has been a good month thus far in the markets. And we're looking into having a good month next month as well. Monday, we will be breaking down. It'll be a special episode for the ETF, the Bitcoin ETF trade, as we've dubbed it. And the different things that are going in there. We're going to go over how we're constructing our positions that might help you figure out your own. So the ETF trade is a highly anticipated moment that's going to happen, as Nick mentioned earlier, the second week of January. We're going to go over and throw in a few TradFi options as well in that to see if you can enhance the position. So thanks for joining us. Don't forget, hang on to your handlebars. Don't go crazy. Remember your mistakes from the last bull cycle, and we will see you again together on Monday.